Can you guys hear me? 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 I think I may be battling with sound. Can you guys hear me? Can you guys hear me? Mic check. Can you guys hear me? Oh boy, what is going on now? I do apologize for that. I think I may be battling with sound. Can you guys hear me? Can you guys hear me? Okay, I can. Hi everybody, hi everybody. Yeah, Red Resendez says he can hear me. I do apologize. If you can hear me, please throw in some fire emojis in the comment section. Throw in some fire emojis in the comment section to confirm that you can hear me. Right. Please confirm that you can hear me. Throw in some fire emojis there. If you can hear me, please. Great. Great. Hello everybody. I'm sorry we've now wasted already 5 minutes trying to get the sound together. My technical team, I don't know what he smoked today, but clearly he didn't do a good job today. But nonetheless we got it right. Welcome everyone. Welcome to workshop number 4. Welcome to lesson number 4, which is live trading and summary of what we've learned. This is our 4th webinar since the beginning of the month of July, and it has been an absolute pleasure, hosting these sessions with you guys. And all shout out to OctaFX for making this possible for you and I to get to interact. You get what I'm saying? So without wasting any further time, I just want you guys to let me know where you guys are tuning in from, where you're watching from, the country that you're watching from. I know we have international people in the building, so please let us know where you're watching from and how's the weather, where you're from. I'm glad to have you guys. Here. Welcome. While you guys are busy writing where you guys are tuning in from, please remember to share this live, to share this webinar with your friends, share it with your colleagues, share it with your trading partners so that they can come and learn as well. All right. And yeah, man, I am excited for today. Hopefully we'll catch some trades, we'll get some opportunities at the moment. All right. And if you are in the Telegram channel, if you have attended the previous sessions, you should be in the Telegram channel, and I'm sure we are all running profits on USD CHF right now. That's a signal that I sent earlier today. Hopefully we might get another opportunity on that pair as well. All right. Can I please see some fire emojis? Fire emojis. Can I see some fire emojis? Right. Alright, can I see some fire emojis in the comment section? Alright, before we proceed, as usual, we have a disclaimer. Any opinions, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute as investment advice. If you are looking for an investment advice or financial advice, it is advisable that you seek counsel or advice from a regulated entity or a regulated key individual that is regulated with your regulatory body in the country that you are tuning in from. If you're from South Africa, make sure that you deal with someone who is regulated by the FSCA. All right, so that is the disclaimer that we have for today. Everything that we're discussing here is just general knowledge and is meant for general information only, and it's not investment advice or financial advice. All right, I don't see fire emojis in the comment section, guys. I don't see fire emojis. It's too hot. It's too cold in South Africa. It's too cold in Joburg. I need some fire. I need some fire to keep me warm. I need some fire to keep me up. So make sure that you put in those fire emojis, fire emojis, fire emojis, fire emojis, fire emojis. All right. And as usual, again, you know I love you. You know OctaFX loves you, and we always got something for you in store. You get what I'm saying? So, let me just see if you guys can still hear me. Okay, it appears that you guys can still hear me. All right. Let's see those fire emojis. Prince from Tembisa, what's going on? What's going on? My brother, what's going on? Prince all the way from Tembisa. I used to stay in Tembisa, by the way, bro. I used to stay in a place called Rubber Ridge in Tembisa in Ivory. So yeah, you're homeboy. All right. So as I was saying, guys, as usual, we have something for you for all the participants of today. Okay, we have 100% bonus. All right, after attending these lessons, use the promo code that I will give you at the end of this session to double up your deposit. So you will get 100% deposit on your first time 100% bonus on your first time deposit. All right. And I will give you guys a promo code at the end of this session. All right, so please make sure that you stay tuned all the way from Alberton South. What it do. What it do. What it do. You're welcome. I hope you're keeping warm, and I hope you're ready. For today. We're gonna make some money. Hopefully we get some nice sniper entries. If you know me, it's Agent 45, Mr. Sniper entries only. We don't play, you get what I'm saying? If you've been here, we've shared some few trades before, and last week we saw that we're in dip profits. Today again, I sent another analysis in the group, and I hope you took that signal, because we are swimming in dip profits right now as we speak. All right, so again, as a giveaway, out of this session, you're gonna be getting this the guide, in a follow-up email once this is done. So everything that we'll be teaching today, you'll receive it via email. Isn't that awesome? I hope you really love it. So give me those fire emojis before we proceed. All right, for those of you that are only tuning in today, this is your first time with me. It's our first day together. So it's important that I introduce myself to you so you know exactly who you're dealing with. You get what I'm saying? My name is Isaac Izy, originally from South Africa. All right, I'm a professional trader with 10 years of experience. So I've been in this game for quite a while right now. All right, I'm a founder of a company called Forex College. All right, we are an educational institution that is based in Johannesburg, South Africa. All right, we have over 5,000 students throughout the whole of Africa and the globe. And we have held more than 300 seminars, Forex seminars throughout the Southern African region. I'm talking Botswana, I'm talking Namibia, I'm talking Mozambique, I'm talking Zim. We've been to all these places sharing the knowledge in the Southern Africa. All right, and soon we'll be heading to the Western Africa. We'll be going to North Africa as well. And my passion as an individual is to provide new traders with proven strategies and empower them to succeed. My passion, if you've been following me for the longest time, you will know that I'm passionate about helping people. All right, I'm not about cloud chasing, I'm not about flashy life and all of that. My passion is to help people succeed, is to help people discover their potential and become the best version of themselves that they can be, and attain that financial freedom. That is who I am. I see Kirileng, I took the signal, I am in deep profits. Great, man, I'm happy for you, I'm happy for you. Let's see those money emojis. If you took the signal and you made money, please make sure that you throw in those money emojis, the dollar signs, the dollar signs, the dollar signs. All right. So today, what are we talking about? Today what we are talking about is we are doing a summary, and we're also going to be doing a live trading, so I can show you guys exit points, entry points, how to spot those nice entries and all of that. All right, so we're going to be discussing understanding the market structure. All right, if you've been following me for a while, you know I'm a market structure dude. All right, we're gonna talk some key levels. I'm gonna give you a little bit of juice there. All right, something, a little bit of just a little thing yana from my strategy, so you guys can know how I get those sniper entries. I won't give you all the juice, but I'll give you enough for you to, you know, to start catching those sniper entries. You get what I'm saying? So we're gonna be talking entry points, we're gonna be talking exit points, we're gonna be talking risk management. All right, so that's before we waste any more time. I see we're already 15 minutes in. Let's get to it. All right. So number one, as I said, we're going to be discussing market structure, understanding the market structure. Market structure helps you understand and define current market condition. This will give you buying or selling opportunities. All right. At this step, you need to decide which trend is happening right now. Okay. You can identify the market structure with chart patterns, with trends and ranges, elements of fundamental analysis, trend indicators, and so forth. All right. So market structure is just basically us understanding where the market is heading, where the market is coming from, and what what speculations can we make, what information are we receiving from the market, to make better trading opinions. All right, so we're gonna get into the practicals where we can discuss, so I can show you how to what market structure is, how to identify trends, and all of that. All right, so what you guys need to understand is whenever it comes to forex trading, is the bigger picture is always important. So it's important that we get to the bigger picture. You understand the bigger picture of the market. All right, so without wasting any more time, let's quickly go to let's go to the charts. All right, let's go to the charts so we can I think for today, let's quickly go to indices, because I know a lot of people trade indices. All right, let's go to US 30. Should we go to US 30? Let's go to US 30. Where is US 30? There we go. We're gonna add US 30. All right, I'm gonna change the template right there. Didn't I do the template? Okay, let me do this. Let's go to USD CHF. All right. So we're gonna be discussing market structure. So I want you guys to understand what market structure is, right? So as we've discussed in previous sessions, that the market is made up of different trends. All right, the market is made up of this uptrend, is made up of the downtrend, is also made up of the sideways trend. All right, so basically, when you get to the charts, what you want to do is you want to determine what trend are you currently in. So right now we're looking at a daily chart on US 30, which tells us we are currently in an uptrend, because we have concluded in the previous session that whenever they are in an uptrend, there is a series of higher highs and higher lows. All right, so we see we have higher highs there, we have the market trending up, and we have a series of higher lows. All right, so we have now determined the bigger picture of the market, of which we are now in an uptrend. All right, so market structure says, let me just quickly go to the 4-hour chart. We're gonna start from this area here. so I can just explain market structure in a little bit more detail for you guys. Let's get the shape. So we're gonna start from this area there. All right, so we can see the market has been trending down and then it's now trending up. All right, so what is structure? Structure says you need to have a series of a high, all right, and you need to have a low, all right, for you to be able to determine what trend you're currently in. And for you to know whether you're in an uptrend or a downtrend, a high or a low needs to be broken. So we can see here a high has been broken from this area here, and the market created another high there. All right, I wish I was on trading view, but it's fine, we can work with this. All right, we can work with MetaTrader 4. All right, and then now we see that another high was created and another low was created. All right, and then a high was broken again for us to create another high, which tells us, which confirms that we are in a what? We are in an uptrend. We can't adjust the volume, we can barely hear you. Okay, just 1 second. I think from my side the volume is quite okay. And then the high was broken again for us to create. Is anybody else struggling with the sound, or is it, if you can hear me, if anybody can hear me, please throw in some fire emojis in there. Throw in some fire emojis in there. All right. All right. Do we guys okay. I'm waiting for the fire emojis. If you can hear me, so this is basically market structure, right? So we are in an uptrend, and then we have the market creating a series of higher highs and higher lows, breaking the higher highs and creating higher lows. So that's what we know as market structure. Now there is an in-depth of this. All right, so we have internal market structure as well. If we go to let's focus on this area there where we worked on. The sound is fine. Okay, great. So now let's look at this area. I'm gonna go to a smaller time frame now so I can explain a little bit about internal market structure. All right, so let's look at this area here. All right, as we know that we were in an uptrend, although if we look at this on a smaller time frame, you can see that we have a minor downtrend, and that's what we call an internal market structure, which we will dive into more detail as time goes by. All right, so I just want you guys to understand, this must not confuse you. All right, this must not confuse you when you see this and you think, I know, but we are in a downtrend. Why is Isaac saying this is what we call internal market structure? Are we together? I hope you guys understand what the basic of what market structure is. And then if we look at let's go back to our 4 hour 1 hour time frame, so you can have a look at a downtrend. Let's have a look at a downtrend there. There we go. So if you're looking at a downtrend, you'll have a series of you see that the market is trending down, creating lower highs. All right, do you guys understand that? Do you guys have a clear indication of what we're talking about when we're referring to market structure? All right, are we together? All right, can I see some fire emojis? Actually, because we are making money from the signal, let us switch to money emojis, the dollar signs. Let's switch to the dollar signs. All right, so now let's go back to our presentation. All right, let's go back to our presentation over there. All right, so now we're gonna be discussing key levels. We're gonna go back to our charts. All right, so we're gonna discuss trend lines, we're gonna discuss moving averages, Fibonacci support and resistance. All right, so you guys can understand how to determine key levels on the charts. All right, are we together? All right, so That's what we're going to get into now. We're going to go back to our chart. All right, we're going to go back to our chart, and then we're going to detect key levels. And as I promised that I'll give you guys just a wee bit of juice when it comes to the best way to use key levels. All right, the best way to detect your key levels. All right, so we all know about support and resistance. That's something that we've discussed previously. All right, we all know about support and resistance. We've discussed that in the previous webinars. All right, so that's one of the ways that you can know, you can you can mark your key levels on the charts. All right, and as we've discussed before, that the market is basically history repeats itself. We all agree on the principle that history repeats itself in the markets. All right, so as we can see in this picture here, I'm just plotting out lines here, your support and your resistance levels. All right, basically you can call them your turning points. All right, where you see that the market is turning, we call those support and resistances. Either price has been resisted or price has been supported. All right, or for simpler terms, for those guys that are new into the market, that don't understand the concept, just look at where the market is turning and go into the opposite direction, right? And if you go back into history, you'll see that whenever price reaches those red lines that I've plotted in the market, the market reacts. We can see that the market got here, went down, got to this price, went down, came back again to retest, and all of that. You guys can see that, right? The same thing here. Whenever the market reaches these red lines that I've plotted here, there is a reaction from the market. Now let's dive in deeper into this. All right, and we're gonna go into history. So I think let's go on a 30 minutes chart so you guys can be able to spot these things nicely. All right, you can get to spot these things nicely. We said the first thing is you need to understand what trend the market is in, so you're able to know which opportunity you're looking for. Now I want you guys to look at something. We're gonna look at price right now, right? The market is currently on price 35,470. Now I want us to take our horizontal line and place it at price at even numbers. All right, we're gonna place it at 35,400. all right, we've placed our price at 35,400, and I want us to look at our another 100 there, which is 35,300. all right, and then we're gonna go to 35,200. I want you guys to notice something here, and if you can notice it already, please keep the money coming in. Keep the money keep the fire the dollar signs coming in. Keep the dollar signs coming in. All right, and then we're gonna go to 35,100. Are you guys noticing something here, eh? Are you guys noticing something? All right, just to give you guys a little bit of a secret there, this is how I get my sniper entries, using these prices. All right, and this I explained more on the yes, 34,900, and we're gonna let's go to 35,000. all right, let's go to 35,000. No, not 3,500, 35,000, but my apologies on that one. All right, so guys, look at this. Can you guys see this? All right, do you see that those prices, without even me looking at the turning points, but wherever I put those hundreds, wherever I put those lines and getting that price, whenever the market gets to those prices, there is a reaction on those prices. We see here price broke 34,900, went to 35,100, broke it, came back in, went all the way up to 35,200, came back in to 35,100, broke it, 35,300. The market keeps playing on these numbers here. Can you guys see that? If you can see that, please comment in the comment section and say Easy, I see it. Easy, I see it. All right, so these numbers you can also use 50s, but now we're gonna work only on the 500s. All right, 35 500. See, so that means your next key level is that 35 500 there. Can you guys see that? This also acts as your support and resistance, and if we go back into history, I'm sure we can see that even mark, oh boy, what did I do now? My apologies on that one. Okay, there we go. Do you guys see that? Easy, I see it. Easy, I see it. That's right. That's right. That's right. That's right. So it's important that you understand the psychological levels. All right. We call them round numbers, or we call them RB numbers. All right. So this is one of the ways that one can. Let's just go back into from this area here. This is one of the ways that you can detect your key levels or your support and resistance using those prices, or you can just easily look at where the market is tending to plot out. I mean, look at that. Look at that. Do you see that? Like exactly at 32,700. This is exactly where the market just touched. And now if I was waiting for this price, this is how now I get those sniper entries. Do you guys see how easy it is for me to get the Agent 45 sniper entries? All right, all right, all right, all right. So let's just, so this is how basically how you can plot your key levels. All right, you can also use the Fibonacci 35 32 800. You can also use the Fibonacci retracement tool I'm gonna show you now, of which you can also, it also aligns with this. All right, and then we're gonna go to 32 900. Yeah man, what did I do now? 32,900. Yes, let's go to 33,000, and then I'm gonna show you guys what to look for when you're looking for entries. All right, where to take your entries, how to confirm your entries, and so forth. All right, 33 100. All right, so easy, I see it. I see people excited. People are excited. They sing the vision. They sing the vision. All right, but yeah, so this is basically how you can put your I mean, look at those clean entries there, eh? Look at those clean entries there. Look at those clean entries. Eh? All right, I see people commenting. Easy, I see it. Easy, I see it. That's lovely. That's lovely. I'm glad that you guys can see it. I'm glad that you guys can see it. All right, so you guys now understand how to plot your key levels. Oh, I did say that I was gonna help you guys with the Fibonacci retracement. Let's go to the Fib. All right, let's go to the Fibonacci. So how you place your Fibonacci retracement is always from a swing low to a swing high. Okay, so you'll take it from that area there all the way to that area there. All right, or let's just work on a previous trend. Let's see. Let's just quickly go to Fibonacci, and then we'll take it from a swing high all the way to a swing low. All right, so that is how you plot your key levels with your Fibonacci retracement tool. I'm not much of a fan of the Fibonacci because, like I said, I use my key levels, the ones that I showed you now. All right, so that's what I use for my thingy, to get my key levels, to plot out my key levels, the psychological levels. All right, is everybody with me? Is everybody understanding? Everybody understanding? I'm gonna get to where I'm gonna show you your entry points and your exit points, but I think most of you can see the vision with what we've done already. All right, with what we've done already. All right, Let me just plot these things so we can come back again to it. We'll go to 33,600, right? 33,700, 33,800. All right. And if you go onto your laptop and you start plotting 10s and 50s, you will see that this is a masterpiece. This is really a masterpiece. This is next level. This is next level information. This is next level information, and yet it's so easy. 34,000. You guys see that? You guys see that? All right. Okay, now let's go back to our presentation. So you guys know how to plot your I have running trades here, so I need to monitor them a bit. All right, so you guys know now how to how to plot key levels on the market. All right, you can also use indicators. You can also use like I said, the Fibonacci retracement. You can use, there's a lot of things that you can use, all right, to plot out your key levels. But like I said, the easiest way for you to do it is just to look at the turning points, or you can use those psychological numbers. All right, and I'll explain as we go forward what those numbers actually mean. All right, are we together? Are we together? Let me see those money emojis. I don't see those money emojis. You guys are not with me. You guys are not with me. I don't see those money emojis. I don't see those money emojis. All right. All right. And then we're going to get into candlestick confirmations. All right. We're going to get into candlestick confirmations that you can use at the key levels for you to determine your entry and your exit points. All right. Are we together? All right. There's only a few people commenting, guys. What's wrong? Eh? What is wrong? Okay, we're gonna look at the candlestick confirmations. All right, and we're gonna talk about so entry points, we're gonna look at candlestick confirmations, and then exit points, we're gonna look at the swing highs and the swing lows, how to set your stop loss and your take profits. All right, so now we're gonna go into history in the market, and I'm gonna show you how to mark your entries and your exit points, which is something that we have done now. Okay, so now I just want us to go a little bit in history where there was a lot of activities in the market. All right, so as I've told you, you mark your key levels. All right, first you determine the trend, of which we will now, depending on where we're gonna start. That's 34,100. All right, and then we're gonna go to 34,200, 34,200. All right, and then we're gonna go to 34,300, or let's use 34,350, so you guys can see exactly what I was talking about when I was talking 34,250, so you guys can see what I was talking about. You see now at 250 the market also turned. Okay, right, so now we spoke about the round numbers. All right, so what do you need to know about the round numbers? Okay, let me just give you a little bit of background. All right, so one of the rules is that the market will always reverse near or next to the round number. All right, and also the market usually reverses at a round number, as we've seen there. at an you see there, the market usually reverses at a round number or RB number or your hundreds. All right, but also it's also important for you to know that not every round number will cause a reversal. Other round numbers will be broken, tested. All right, they say the voice, say your voice isn't listening, please full the volume. Let me just quickly go to OBS and increase the volume there. Can you guys hear me now? Is it better? Is it better? Can somebody please confirm if the voice is better now, if the volume is better? All right, let's proceed. 33,500. All right, we're just plotting out our key levels now. So I'd suggest that you go on your MT4 or your MT5 and start plotting these numbers on your chart and just leave them there, so you don't have to plot them all the time. All right, me on my charts, these numbers are always plotted. All right, 33,300. all right, or you can go and set your support and resistance levels. All right, 33,200. let's see, I think we got everything right now. All right, so all is well now. Okay, great. They say the sound is better. Guys, if the sound is better, I want to see some money emojis. All right, I want to see some fire emojis, money emojis, dollar signs. All right, to make sure that we are all understanding each other. All right, so as I said, you can use these round numbers as your support and resistance. All right, oops, what did I do now? They act as your support and resistance. 3,200. There we go. All right. Are we good? Are we good? All right. So now I'm sure by now you are just like, you know what, Isaac, I don't even want to hear you anymore. I can see I got this on lock. All right. So here's a few things that we need to look into. All right, a few things that I want us to look into. All right. So number one, as I said, I think what we should do is, let's move back a bit. Okay, let's start from here. All right, we'll say this hasn't happened, so we're starting our analysis from here. So number one, what you need to do is you need to understand what the direction of the market is. All right, or the trend. We've already discussed trends, so we now see that the market is in an uptrend. All right, we can all see that the market is in an uptrend. All right, so if the market is in an uptrend, it means we are in a bullish momentum. All right, it means there's more buyers than there is sellers. All right, so now once you determine that you are in a downtrend and you've plotted your key levels, while you look at what current price is, where current price is. Okay, let's say for instance the market was here. Let's say the market was in that block over there. All right, we all agree, say the market, it was been shooting up and then it's in that block there. Let's say it's even up here. Now, is it okay for you to enter a buy there? No. So what do you need to do is you need to wait for a retracement or a pullback towards your nearest RB number or your nearest support and resistance level. All right, you wait for the price to swing back in the direction, all right, of the trend one, and then you wait for a correction to begin after a high in an uptrend or after a low in a downtrend. I hope I'm making sense. All right, so we wait for price, right, to swing in the direction of the trend, and we see here the market swung up, and then we see a correction coming up. All right, and then as we can see here, the market was corrected all the way near to a RB number, right? So now we need confirmations. What confirmations do we need for us to know where we're gonna enter our markets or enter our trades? All right, so I want to show you something regarding this, right? So number one, as you can see from this break here, the market swung 1, 2, 3, 4, all right, and then there was a bit of a consolidation there. So usually when with these RB numbers, all right, usually what the market will do, it will swing up 3 or 4 RB numbers, all right, and then before a correction has begun. Not all the time, but most of the time, all right. So as we can see from here, the break of this high that the market swung 1, 2, 3, 4, and there was a bit of a consolidation, and the break of that was swung 1, 2, 3, 4, and then there was a correction. Do you guys see that? So now after a correction, we wait for what? We wait for a candlestick, what you call a candlestick formation. All right, we wait for a candlestick formation to form. For instance, here we can see we have a pin bar. All right, we have a rejection where on 3300. Okay, so if again, depending on what type of a trader that you are, if you want to go in and out, buy low, sell high, take all directions, even here when you can see that the market rejected and we had an engulfing there, you could have entered the market, and your next TP is your next round number. All right, even here we can see the market broke. If you go on a smaller time frame, oh boy, where are we now? Think oh boy, what did I do now? Apologies. I just want to go back to, yes, there we are. All right, so even if you can see here, the market broke, retested that RB number, went all the way to another RB number, right? Market broke, retested. If you go on a smaller time frame, we'll have a retest there. The market came to another RB number. Eventually we rejected at this RB number, and then we are now going up. We can also use this variation here as a confirmation on a smaller time frame. This variation here, we can see now that the market is now trending up because it failed to break this low. It created another low. So now we can wait for a break of the RB number, come in for a retest, and then we go up with it. Now the trick here is you always use your next RB number as your take profit or your exit point. Are we together? But you also use the RB number as your entry point, or your key level as your entry point. As we can see there at our support, this is where we took our buy. All right, the market came here, hit take profit. We wait for a retest on this. Eventually the market broke in, went down a bit again, came back again to hit our next TP, which is our next take profit. All right, came back here. You can enter again because it's a retest of that if you understand market structure, is a retest of that previous high. We went back up again to the take profit. Market came down for correction, went back again there. All right, so can you guys see that? Can you guys see? And again, that's on a smaller time frame. You can imagine how many trends you've taken there. So initially, what we want to do is we want to have a break of this previous high where we said the market was where we started. Once that breaks there, we know that the market is continuing because this was our previous high. So it has been broken there. The market retested it. We went to the take profit, came back again, went to take profit, correction again, take profit, take profit, take profit. Are you guys seeing this? Are you guys seeing this magic? Are you guys seeing this magic? One, you just identify the trend. When you identify the trend, you put in your key levels. Once you put in your key levels, you wait for the market to swing in the direction of the trend. Once the market swings in the direction of the trend, it's a confirmation that you are still going in that trend, and you wait for a correction, the correction that happens near your round number or near your key level, and then you execute your trades there. And your exit point is your next key level, all right, or your next round number that we have used over this side. Like I said, you can use 50s, you can use hundreds. Imagine this is US 30. If you're using hundreds, that's 100 points. You can imagine how much you're making. And if you're looking at these entries here and looking at where the take profit is, and you look at the drawdown, I mean, let's say you took an entry there, all the way there, literally no drawdown, all the way to 100 points. All right, you take another entry there, all the way to 100 points. All right, so let's look at another one. Okay, now the market is trending down. Let's look at sell opportunities. Look at that that sell over there. You took that sell there all the way to take profit, literally no drawdown. Look at that, all the way to TP. Look at that drawdown, nothing. All right, so do you guys see that? Do you guys see that? Give me fire emojis if you guys are understanding. Give me fire emojis if you understand key levels, if you understand entry points, if you understand exit points. All right, can I see money emojis? I mean this is gold. I want you guys to from today's Monday, from tomorrow, I want you guys to hit those back-to-back TPs. I want you guys to get those sniper entries. So if you understand, please let me see those dollar emojis. Let me see those dollar emojis. Let me see those fire emojis. Basically, guys, this is one of the secrets that I use and incorporate in my trading strategy to make sure that I use I get those sniper entries. But then again, there is a more in-depth of this whole concept, but this is for beginners. This works, right? The main thing, you just need to know what trend you're in. If we are in a downtrend, you're just looking for sells. If you're in an uptrend, you're looking for buys. If you can see the market is trending up, you look for buys at your key levels. Whenever key level is broken, you just enter. If you're selling, you look at sells from near your RB numbers or near your round numbers. Do you see that? And you always use your take profit as you always use the next round number or your next key level as your take profit. All right, now we're gonna discuss stop loss. All right, stop loss, it depends again what type of a trader that you are. All right, some traders don't prefer using stop losses, some traders prefer using stop losses. I would say, okay, I would recommend, right, based on this strategy here, let us use 50 points as our stop loss. All right, so if you are entering at 34,200, your stop loss should be 34,250. all right, if you're entering at 34,250, your stop loss should be at 34,300 and so forth. All right, you can use those. So if again the market goes to the 50, it's likely that you entered way too early, or the market is still correcting. So let's just wait for another opportunity and then we can take it again. All right, so are you guys with me? All right, are you guys with me? You take your entries at the direction of the trend and you set your stop losses at the opposite thing of the trend, 50 points. All right, also depending on your risk to reward ratio. All right, so that on that, based on that, if you're using your TP, it's a 1:2. all right, it's a 1:2. all right, let me see those dollar emojis. Let me see those dollar emojis to make sure that you guys understand what we're talking about. To make sure that you guys understand what we're talking about. All right. All right. Let's move on. Let's move on to risk management. I don't see dollar signs, guys. I don't see dollar signs. I want to see dollar signs. I want to see the money. I want to see the money. All right. So, what is risk management? All right. What is risk management? Risk management involves identifying, accepting, and mitigating trading decisions uncertainty. Risk management plays an important role in your trading journey as a beginner trader. Since forex trading entails taking considerable financial risk. With proper risk management, you can encounter a series of losses without blowing up your trading account. All right. So now, especially for the new guys here, it's important that we understand the concept of risk management. All right. You do not have to risk your whole account per trade. All right. Now, professional traders will tell you to risk 1% of your account. Now, but if we are talking about beginner traders that are funding $50, that are funding $100, 1% of that is literally the spread. All right. So now what we need to do is we always look at the risk to reward ratio. If you look in and how much you're willing to lose. All right. So now I would say for smaller guys, let's look at maybe 5 to 10%. All right, to give room for the trade to run. But then again, that is my opinion. All right. So why should you use proper risk management? Forex risk management enables you to implement actions to ensure any negative impact of a trade is manageable. Remember, I said last week, this is not a business of certainties. It's a business of probabilities. So even after we've done all this analysis, there's still a possibility that the market could go against us. So now how do we ensure that if the market goes against us, we are still in a position to come back in the market and we don't lose all our capital? Risk management. That includes setting your stop loss. That includes using smaller lot sizes. All right, depending on your account size. All right, an effective strategy requires proper planning from the onset. It's better to have a risk management plan in place before you actually start trading. What a lot of people do is they want to implement risk management after they've taken the trade or after they've lost money. No, you do it before you even start entering. You need to know, okay, fine, on this trade, this is how much I'm willing to lose. This is how much I'm willing to make on this trade. This is where my stop loss will be. This is where my take profit will be. And you are happy with those decisions before you press the buy or the sell button. All right. A proper risk management will minimize your loss, will keep you in the market longer. All right. So these are some of the risk management tips that we want to share with you guys today. Okay, number one is get an adequate knowledge of the forex market and its risk before trading. All right, it's important for you to know what you're getting yourself into before you can even put your money in. All right, number two is backtest new strategies in your demo account before trading on a real account. All right, so what we've discussed today, don't just jump into the real market and start trading with your real money. Go on a demo account, test that out, see if it works for you, see if you really understand it, and then you can take it from there. Okay, number three is understand the impact of leverage. All right, remember now, the higher your leverage, the more trades you can open, but also the higher chances of you losing your money. So it's important that you understand the impact of leverage. All right, number four is you need to work on your risk appetite. Work on your risk appetite. All right, number five is use a moderate position size. Use reasonable lot sizes based on your account size. All right, number six is set preferred stop loss and take profit levels on your trades. All right, we've already discussed that. Number seven is choose a moderate risk to reward ratio. As I've said, you can choose a 1:2, a 1:3, or some you can even go a 1:4. Remember, as I said, with the strategy that we spoke, the market usually goes three or four round numbers or key levels before a correction. So you can use a 1:4 risk to reward ratio. All right, use a trailing stop loss on your trades to protect your profits. All right, so you use a trailing stop loss. So whenever the market goes into profit, you trail your stop loss and put it into profit, so in case the market reverses, you are also in a winning position. All right. Number 9 is you need to learn how to control your emotions and don't overtrade or revenge trade. How many of you have lost a trade and you just jump into the trade because you are angry at the market? See, we've all been through that. Now, professional traders don't do that. So learn how to control your emotions and don't revenge trade. All right. Number 10 is know when to stop after consecutive wins. All right. A lot of traders were killed by the idea that they are good traders. Because they've won so much, they believe now they've conquered the market and they eventually take back everything into the market. All right. So know when to stop. All right. Number 11 is never risk more than you can afford to lose. All right. And as they say here, 2% or less per trade. All right. Are we together? All right. We spoke about risk to reward ratio. We talked about stop loss and take profits. All right. So now we're gonna set in stop loss, explaining the risk reward ratio. I'm gonna show you how to move your stop losses into profits. All right. So now let's go. Unfortunately, we don't have an open trade here. I want to see if we can get a nice entry on US 30. We are actually at 30 near our 35,500 key level. All right. So let's go on a 30-minute chart. All right. So as we can notice here, there's been a lot of inactivity between the buyers and the sellers, but we are next to a key level. All right. So chances are we've gone 1, 2, 3. There is a chance of the market coming back here. All right. Or again, this might be a signal for someone if you are listening. If the market breaks this price and comes back to retest the key level, all right, comes back to retest the key level, what do? We are shooting all the way up. All right. So it's 8 o'clock now and the market just closed below. All right. Just closed below exactly at our key level. So now what I will do is let me enter a sell so I can show you how to put your stop losses. I'm going to take a sell position. All right. I just took a sell position at our key level. All right. So as I showed you last week, you can either drag this all the way to your TP. Also take into consideration the spreads. All right. Then we set our TP there. All right. So now in terms of my stop loss, what I can either do is I can drag it again to 50 points. I'll just use 20 points for the how. But it doesn't allow me to. Okay. All right, let's just use 50 points. So we're going at 355,550. Stop loss at 355.50. There we go. That's where my stop loss is. So now it means my risk to reward ratio is 1. As you can see there, if the trade goes against me, I'm sitting at 500 losses, $500. All right. And if the market goes in my direction, I'm sitting at take profit. We're gonna do 35,400. All right. If the market goes in my direction, I'm sitting at $1,000 profit. All right. So that's exactly, we can see now the market might be, let's go on a smaller time frame and see what is happening there. All right. So let's see how the market reacts here. So right, do you guys get the basic understanding of, this is my risk to reward ratio is 1:2, or if we can move it all the way up there, considering the fact that the market might correct a bit, we can now say our risk to reward ratio is 1:4. You guys see that? You guys see that? You see how to set your stop losses and how to set your take profits. All right, we will come and check this trade in a few minutes. All right, we'll come and check it in a few minutes. Let's just go back to our presentation for the day before we close. All right, do you guys understand? Did you guys have fun today? Did you guys have fun? Did you guys get something that you didn't know? Did you learn something new? Did you learn something new? Did you learn something new today? All right, as I promised you guys that if you stay with me up until the end, I'm going to give you guys a promo code that you can use to double up your deposit. So if you deposit $500, you'll get an extra $500 bonus, all right, to increase your leverage and your margin. All right, now the promo code that you're going to use after you've registered your OctaFX trading account is Isaac WS, and this promo code is valid up until the 31st of July. So we literally have about 6 or 7 days left for you to use this promo code. All right, this is courtesy of OctaFX. All right, so now let's get into the question. Let's dive into the question. All right, let's dive into the question. If you have any questions, please ask them in the comment section. All right, ask them in the comment section. All right, ask the questions. If not, it's really amazing. It's really amazing having to share my secrets with you guys. All right, I thank you so much for participating. I thank you guys for joining me. On behalf of myself and OctaFX, I just want to say thank you. And remember, if you haven't subscribed, subscribe to this channel and set the notification button. Press the notification button, so next time we have a webinar, you can be notified. There is a lot of massive information being given out every single day. There is live trading sessions pretty much every single day on the OctaFX YouTube channel. All right, there is just a lot for you to learn in this, in different languages from different experts from different countries. It's amazing, man. It's amazing. All right, I see there's a nice question there where they say how to set a trailing stop loss. Okay, let's just quickly go onto the charts. Unfortunately, the issue here is because we don't have a trade that's in profit as yet. All right, it's almost impossible for me to set it, but I'll show you how to do it. So let's say now the market has from our sell there, the market has dropped down till about this price there. All right, till about that price there. All right, so what you do is, instead you're gonna have to move your, where's your stop loss? You just move your stop loss into profits. You just drag it there and place it in profits. All right, as you can see there where it says SL, where it shows the numbers, it shows you that your SL, if the market hits your SL, you are in a 295 profits. All right, so that's how you trail your stop loss. All right, you get what I'm saying? So now unfortunately the market won't allow me to, but yeah, so that's basically how you set you trail your stop loss. All right, what I will do is, let's wait for this price, for this trade to play out. Once it has played out, what I will do is I will then send a video in the Telegram channel where I can show you how to trail the stop loss. Guys, if you're not in the Telegram channel, make sure that you join the Telegram channel. If you scroll up, okay, let me see if I can copy. If you scroll up, you can join. Let me just get the link so you guys can join this link. of the Telegram channel. All right, and I'm sure you'll receive it via email as well. All right. Right, I just saw people saying they are in deep profits in the channel, so which is good, which is good, which is good. I just sent the link. Okay, we are nicely in profit there. We are in a $10 profit. All right, so let's see how it goes. Let's see how it goes. Let's see how it goes. All right. Now let's see how it goes. Let's see how it goes. Let's see how it goes. So that's it from me, guys. I really appreciate it, guys. Hope you guys had a lekker session. I hope you had fun as much as I had fun as well. I just want to say to each and everyone that's here that I wish you guys all the best in your trading journey. Where's the camera? The camera is there. All right. I wish you guys the best in your trading journey. I want to see you guys make it. I want to see you guys become profitable. I want to see you guys become successful professional traders. All right. Oh boy, we just had load shedding now. Oh boy, oh boy, oh boy, oh boy, oh boy, oh boy. Okay, I had lost you guys there a bit, but yes, as I was saying, I want to see you guys, you know, be successful. I want to see you guys be the best that you can be, you know. What's going on? Okay, there we go. All right, so you guys have a lekker one. I hope to see you guys very soon. I hope to see those profits in the Telegram group. Make sure that you send those profits. All right, let's engage. Let's talk. If you have any questions, please ask. Let's make it an engaging. It's not just about you receiving signals or you just receiving information. Ask me questions. Say some stuff as well that I can also learn from you. And that's it from me, guys. Remember to use your promo code IsaacWS to get your 100% bonus on your first time deposit. And remember to subscribe to the OctaFX YouTube channel. As I go, can I see those fire emojis? Can I please see those fire emojis? Can I please see those dollar emojis in the comment section? And that's it from me, guys. I pray that God blesses you. I pray that God increases you. I pray that God favors you, and I pray that you have more money and you take your family to the next level with you. That's it from me, guys. Courtesy of OctaFX. Shout out. I am out. I'm signing out. That's it.